If you lose more than 30% on the value stock, either you bought too early or you can't find a good business. Buy once price confirms rejecting off of demand area. We can physically see NOVO is rejecting off of this demand area. How? Yeah, it don't look like it's going down there. It's already holding. Let's check out, yeah, this is for NOVO. NOVO have great things coming for 2025 in the future as well. Target net margin is low. Man, they need to get that up. I believe Target will get that up. They got plans to get it up. All of them have more rewards than risk. NOVO is bringing in cheese. Look, went from 4 billion from disease and obesity care to, what it did? Ooh, they 10x. You're supposed to make interest not paid. Net margin is phenomenal. You know what I'm saying? That's probably the sexiest thing on this chart. What's up, YouTube? Hey man, Disciplined Diamond Hands back with another video. First thing first, I'm not a financial advisor, but I do have Disciplined Diamond Hands and I do have a lot of game that I'm going to give y'all for free, just cause my goal is to teach one person every day. And I appreciate y'all for viewing it, because I mean, that lets me know, hey, I'm helping at least one person a day. Today what we're going to go over is how important is risk management, an investing strategy that has limited my risk to only like 30%, but profits return over 50% plus, and it's like over 70% accurate, because undervalued blue chip companies have a trend of going up, just like the SPX index as you see right here, and that's what we're going to be covering. 20% of your portfolio, if you got a Roth IRA or you're a beginner investor, this is how your portfolio should be set up, just to prevent blowing it. 20% spot index, 60% value/dividend companies that are undervalued, because once you buy value and dividend companies undervalued with a 30% stop loss, it's more than a 70% chance that they're gonna return you a 50% profit or higher. Then 20% growth/speculative shares, because you're going to want some growth or speculative plays, but as long as you analyze growth and stability, earnings, finance, and fundamentals, you'll be set. But this is what we're about to go over today in the slideshow. Risk management for trading, risk management for trading for investors and swing trading. All right, first thing first, I'm not gonna read everything because I'm from the South. I probably talk slow and I probably read slower. So if it's not underlined, I'm not reading it, but just pause it and read it. First thing first is I got all these articles from Investopedia. So if you wanna verify my sources or read up on them, go to it. Investopedia, bro, they economists, they got journalists, they got they got investors, they got everything on their website that produce these articles. So it's not no article based off of somebody that ain't, you feel? But first thing first, what is financial risk management? There are risks in all investments. Successful financial risk management requires a balance between potential risk and potential reward. I'm risking 30% to make 100%. Okay, cool. Balancing risk and reward is a crucial process in an investment decision. Risk management strategies include avoidance, retention, sharing, transferring, and loss prevention and reduction. Think about this, like we all minimize our risk. Walking outside is risky, so we carry a gun or we carry a bulletproof vest. Driving a car is risky, so we wear a seatbelt. Riding a motorcycle risky, we wear a helmet. Going to school is risky, that's why they got the metal detectors there, they got police there, everything. Being in relationships risky, having business partners risky, trusting people risky. Everything is risky, but you have to manage that risk, you know what I'm saying? And that's what we do in investments. We manage risk just like we manage risk throughout personal life. Failures in risk management, inadequate risk management can result in a severe consequence for companies, individuals, and the overall economy. If you don't focus on risk management, you will result in severe consequences. And that is true. How to protect your capital? Low price. Never buy anything above 30 RSI on weekly. If you lose more than 30% on the value stock, either you bought too early or you can't find a good business. Buy once price confirms rejecting off of demand area. Only buy businesses with expanding profits and customers. So look, check this out. All these three businesses on here, Check this out. The indicators I got on here is I got 2 EMAs, and then I got 1 RSI, and then I got volume bars. It's on the 200, and then this one is on the 50, and then these are my EMA settings. I got more videos going more in depth with these indicators, but these are the inputs for them. So let's check out NOVO right here. Like this thing said, right? Buy once price confirms rejecting off of demand area. We can physically see NOVO is rejecting off of this demand area. How? Well, first it came down to it. First off, it was below the 30 RSI right here. But then it came down to this area, and look, it got a long wick off of that area, showing rejection. Not only if it's showing rejection, closed above, and you know it's going. Let's look at target. Let's look at it on a monthly time frame. That's what we do first, market on a monthly time frame. One thing that I would have liked if these RSIs was below 30 on a monthly. That's why I said weekly. Sometimes I look for it to be below on a monthly. Like let's see. No, LEN wasn't. Some things I invested in was oversold on a monthly. But yeah, let's keep going. Only by businesses with expanding profits and customers. So check this out. Let's see what NOVO is doing. Is NOVO expanding? Yes, because their revenue in 2020 was 19.4 billion. Now it's 42 billion. It almost doubled in under 5 years. Not only that, their net margin was 33% back then, is 34%. Now it's growing. We can check more things right here. I always check on the annual because we're long-term investors. Yeah, you can check quarterly. Quarterly is good. But if we're looking for a long-term perspective and we holding things for over a year, then we need more data to help predict what may happen in the future. And yeah, check this out though. These are the reported revenues and what they're expected to grow into. Grow into. Some people might have high growth expectations, but it's like, okay, you got high growth expectations, but have you previously been meeting your past goals? Because if you haven't been previously meeting your past goals, how will you meet your future goals, you know? So, yeah, and then as well as Target has growth as well, even though, you know, they have current events that are, that could be, you know, cause fear mongering. It's okay because we got something else to show you. Okay, what to not do. Paying a car note, going to predatory lenders for credit cards and payday loans, high APRs be killing well. You're supposed to make interest, not pay it. Making restaurant rich by eating out more than investing, subscription overload, vices overload, data plans. Okay, what to not do. Paying a car note. Why you shouldn't do that? Because that's already a waste of $300 a month. If you're wasting $300 a month, you can't invest $300 a month. Going to predatory lenders for credit cards and payday loans, high APRs be killing wealth. You're supposed to make interest, not pay it. If you're paying interest 20%, 30%, okay, loans and credit is good. But if you're not making more than the APR, then it's bad. Making restaurants rich, like, man, sometimes I be like, bro, would I rather make them richer or myself richer? And then I don't do it. Because either I invested so I can have my own yacht, or they gonna pay for their own yacht, you feel me? Subscription overload, vices overload, data plans, unplanned money moves, not having a budget, not investing or saving before paying bills and wasting money. Never invest bill money or money you need. Investments are like seeds. You plant them and reap the harvest months or years later. You can't plant your money in an investment and pull it out before it starts growing. Don't over leverage into risk. Entering without a take profit and stop loss plan. Don't do that. Not journaling. Don't do that. Man, you need multiple journals. I got like over 10 journals, but I say this is one of my favorite journals just because everything I buy, I write like 4 pages worth of why should I buy, you feel me? Like, let's check this out real fast. All right, y'all, check this out, right? So I wrote about VSAT, right? And y'all see what VSAT did. VSAT ran up like over 200%. But you need to write down the description, the SWOT, the moat, the fundamentals, the leadership. Write down some current events, and what else I got in here? The customer reviews and worker reviews. That's what my notes be consistent of. Then I got multiple notebooks for like trading. this is my investing journal, though. Strictly for investing. Not having a game plan and not using fundamentals is another thing of what not to do, man. The 3 stocks we're going to look at, this is a screenshot from Simply Wall Street and what their analysts predicted, or their analysts, calculated from these stocks. And yeah, you can check them out. All of them have more rewards than risk, and I'm going to go over some of the rewards now that I see. So first thing first, like I said, I see growth potential in them. We're going to look for growth and stability. We're going to check out their earnings, finance, and fundamentals. That's what we're going to do for all of them. So they're consistently beating earnings. That's great. Let's check this out. Are their earnings expected to grow? Yes. Is their revenue expected to grow? Yes. Has it been growing previously? Yes. Where they get their money from? They bringing in cheese. NOVO is bringing in cheese. Look, diabetes and obesity care, rare diseases. Every year is increasing. That's crazy. Went from 4 billion from disease and obesity care to 40 billion. Ooh, they 10x they revenue. That's crazy. And they work with every country. That's crazy. But let's check next. We got Target. We're gonna check out Target earnings. What their earnings been looking like. Dang, they've been beating earnings in the past consistently. Okay, their revenue has been, increasing. And they've been beating what their expectations were, and they're consistently growing. Revenue. Oh yeah, they got a lot of different categories. Yeah, they also have been paying dividends as well. That's another good thing. And not only that, it has been increasing. So it has been increasing since over the past 20 plus years. From my eyes, I think, unless I'm just seeing dividends. Ooh, they just paid a dividend. What about their dividends? Their dividends they've been paying dividends since 2003. It was 4 cents for so long. But yeah, they've been paying dividends since 2003. Let's check out their earnings. Earnings are forecast to grow. They have been beating earnings. Barely. Their revenue is growing. What's else on that list? These are their revenue streams right here. And let's see what's on this list. Okay, fundamentals. Yeah, let's go over fundamentals first. So net margin, that's the best thing on this list. It's the sexiest thing on here, and it means that they really bringing in profits after they pay for everything. After they pay for their bills, their investments, their employees, they bringing in that cheese. Debt to equity is great. It's below 2. It's great. They ain't got high debt, nothing too crazy. Dividend yield is cool. They've been increasing their dividends as well. Return on equity is sexy as well. They're very profitable, and we can tell they're very profitable because their net margin is up. If they was unprofitable, the question of the day would be, will they be profitable? And the question would be, will their profits grow? Because if their profits grow and they'll eventually be profitable, then that's a good investment. Like for unlimited gain. Look, GPN, net margin is great. Debt to equity, great. Free cash flow. Look, their free cash flow is increasing year over year. Return on equity, decent. Target, net margin is low. Man, they need to get that up. Do you think they'll get that up? I believe Target will get that up. They got plans to get it up. They're investing to support new stores. They're accelerating their progress with new products. They're working on their CEO thing. They got some current events and current headlines that caused the drop, but they're heavily undervalued. Let's check out, this is for NOVO. NOVO have great things coming for 2025 and the future as well. Free cash flow increasing. Operating profit growth is great. Rare disease sales, obesity care sales is up. We was just looking at their obesity care sales on the other page. But yeah, they got great things going on. NOVO is doing great things, and they're at an undervalued level. And if I ain't got Novo yet, but I got my eyes on them. And if I was to invest in them, I ain't gonna lie, I wouldn't have to reach more than 30% because check this out. Honestly, look, the lowest right now is 25%. If it break 25% and it break that 30%, it ain't no point in me holding. It ain't no point in, that mean I got in too early. If it break that mean I should have got in here or when it came down a little more. But yeah, it don't look like it's going down there. It's already holding. Same way for Target. If I was to put the, I'm watching Target as well still. But a 30% stop loss on Target would just lead to high astronomical amounts, like at least 90%. You know, at least at least say that. Okay, at least 50%. At least 50%. That's what it's gonna do. Novo, it will go above all-time highs, but let's say at least 50%. You feel me? So then we got GPN. GPN is holding this level right here perfectly. So if we was to invest in them, 30% stop loss right here, profit target at least 50%. So it's like, okay, here is a 50% plus profit potential for a 30% risk reward on 3 companies that are doing great things. Check out GPN. GPN is a little rocky as well, like Target, but they're still doing great things and they're still expected to grow, and the demand will pick up as they keep growing. But yeah, delivery ahead of Q2, 500 million repurchasing. Okay, they dropping some cheese. Yeah. But yeah.